Remember when your favorite international mutual funds suddenly stopped accepting new investments in 2022? ICICI Prudential Nasdaq 100, Motilal Oswal S&P 500 all closed. The reason India hit its $7 billion overseas investment ceiling set by SEBI and RBI. But here's something most investors don't know yet. There's now a new way to invest globally through Indian fund houses that completely bypass this cap. No frozen subscriptions, no worrying about when the fund will reopen, no waiting for when the industry cap will be revised. I'm CA Vamika from the Wealth Palette, and today I'm revealing Gift City Global Mutual Funds, India's newest gateway to international investing that solves the foreign investing limit once and for all. Let me give you the complete picture upfront. There's only one fund live right now through this route, DSP Global Equity Fund. This fund's minimum investment is 4.5 lakhs, which is significantly higher than other investing routes. The onboarding is also currently not fully digital. But the most surprising part is that there's no tax to be paid by the investor. That's because of the way this fund is structured in Gift City. So the big question is this worth it? Or should you stick with direct investing through platforms such as INX GA, Interactive Brokers or IND Money? By the end of this video, you will know first, how do Gift City Global Funds actually work and why can they bypass SEBI's industry cap? Second, how does DSP Global Equity Fund work? Third, how do the charges of DSP Global Equity Fund compare versus other investing routes? Lastly, who is the Gift City Global Fund for and its pros and cons? A small request before we dive in. Do subscribe to the channel as I see 85% of the viewers of this channel have not subscribed yet. Your subscription motivates me to keep sharing even more investing deep dives with you. So make sure you subscribe. Okay, a rapid 30-second recap on what is Gift City, because that's the foundation for understanding why these funds are different. Gift City stands for Gujarat International Finance Tech City. It's India's first international financial services center or IFSC. It's a zone that allows cross-border financial transactions under special regulations and tax benefits. Global institutions, foreign investors, NRIs, and resident individuals all can invest through Gift City. In this video, we'll focus on Gift City investing options for Indian residents wanting to invest internationally through the LRS route. Now, here's what makes Gift City special that solves the mutual fund overseas investing cap problem. This limit of $7 billion was imposed by SEBI and RBI. But Gift City is regulated by IFSCA, not SEBI or RBI. IFSCA is a unified regulator combining all the 4 financial regulators for entities operating in Gift City. This means funds launched from Gift City operate outside RBI and SEBI's overseas investment caps. That's what makes Gift City mutual funds exempt from the $7 billion international investing cap. Currently, only DSP has launched the first global fund from Gift City called DSP Global Equity Fund. But many other AMCs such as Parag Parikh have already set up IFSC arms in Gift City, and they are in advanced stages to roll out their own global funds soon. Now let's understand the DSP Global Equity Fund in detail. It's an open-ended global equity fund domiciled in Gift City and managed by DSP Fund Managers IFSC Private Limited. The global custodian is HSBC Hong Kong, holding the fund's overseas securities safely. The new fund offer started in June 2025. Like all mutual funds, the DSP Global Equity Fund is set up as a trust. But this is a different type of trust, which makes the capital gains from this fund exempt in the hands of the investor. Do you want to know how? I've covered this in detail in the taxation section, so do stay tuned. Okay, the fund's goal is long-term capital appreciation by investing in quality companies around the world. The DSP Global Equity Fund uses the MSCI All Country World Index, short में MSCI ACWI, as the benchmark. This index is one of the world's broadest stock market indices, tracking nearly 3,000 companies across 47 developed and emerging countries. But DSP invests in 30 to 50 stocks from that universe, shortlisted based on high ROE, strong cash flow, and durable competitive advantage. Basically, it's a diversified global equity portfolio giving Indian investors exposure to US, Europe, Japan, Hong Kong, and South Korea majorly. The minimum investment subscription is 5,000 US dollars, which is 4.5 lakh rupees. Minimum additional subscription or top up is of 500 US dollars, which is 45,000 rupees. The fund offers units under two classes. Class A are funds issued via distributors. This has a higher expense ratio of 1.75% because of a middleman involved. Class B are funds issued directly. This, of course, has a lower expense ratio of 1% per annum because it is invested directly without any middleman involved. Okay, now let's look at the most interesting part of why investors are not taxed. The DSP Global Equity Fund is structured as an irrevocable trust. That means by the rules of IFSCA, irrevocable trust structure, the trust pays all the taxes on behalf of investors at the fund level. Now, since the fund is already taxed, that is why capital gains on sale of units are not taxable again in the hands of the investor. That means when you redeem your units, say after 5 years, you don't pay capital gains tax again on your profits. The fund has already paid for it while managing the portfolio. And your NAV already reflects the post-tax returns and reduces your NAV to the extent of taxes paid by the fund. The taxation on the fund is, if the fund sells any of its shares after 2 years, it will have to pay long-term capital gain of 14.95%. If the shares are sold within 2 years, the tax will be 42.74% and dividend is taxed at 35.88%. As for disclosures, since the sale of these units is treated as exempt income for investor, they would have to show the income from the fund in the schedule for details of exempt income. So that means that investors are not required to disclose these investments in the schedule of foreign assets in their ITR as the fund is domiciled in India. But 20% TCS would still be deducted if you invest more than 10 lakhs. However, you can claim this TCS in your ITR. The investment procedure right now is both offline and online. You need to download the application form and KYC documents and mail it to the AMC. You don't need a separate demat account because this is a direct AMC subscription, like investing in any mutual fund. Now you can transfer the money from your normal Indian bank account to your fund's bank through Swift transfer. Banks usually charge 500 to 1000 rupees plus GST for remittance and a forex markup fee.
Lastly, DSP will charge an annual expense ratio from your investment amount.
The fund is open-ended, so you can withdraw anytime. But there is a 1% exit charge if you redeem within 24 months, that is 2 years from the date of allotment. Also, the redemption proceeds will be paid back in USD to your account. If you want to bring that money back to your Indian account, you will just convert your USD back to INR and incur forex charges again. Now, for the most important question. How do Gift City global funds compare in terms of cost with other Gift City platforms like INX GA? Let me show you the complete cost comparison of 4.5 lakh investment, which is the minimum for DSP Global Equity Fund. You hold it for 2 years to avoid paying 1% exit charge. Then you sell and bring your money back to India. I'm going to break down every cost, entry, ongoing and exit so you see the full picture over a complete investment cycle. Let's see how DSP Global Mutual Fund compares with the Gift City platform INX Global Access.
We'll compare the costs in two scenarios. Scenario 1 is remitting without using low-cost banks for forex and bank remittance charges. That means you pay normal rates which bigger banks charge for forex and bank remittance.
So option 1 is investing in DSP Global Equity Fund's Class B units. When you invest, the entry costs would be bank remittance charges of 1000 rupees, forex markup at 1.5 rupees per USD, which would come to around 7500 rupees. During the 2 years, you would be charged the fund expense ratio at 1% of the invested amount, which would come to around 4500 rupees per year. So a total of 9000 rupees. This is deducted from your NAV. Now, when you exit the fund, forex charge of converting your USD back to INR will be at a higher forex rate of 1.8 rupees per USD, which would come to around 9000 rupees. Grand total for complete cycle would be 26,500. That's 6% of your 4.5 lakh investment amount over a 2-year period. Option 2 is directly investing in stocks and ETFs through Gift City's INX GA. There would be bank remittance, forex and brokerage on both purchase and sale. Grand total for complete cycle would be around 21,000, which is 4.5% of the invested amount. That makes DSP more expensive than INX GA by 1.4% approximately. And the assumption is that you don't do any other buy or sell transactions in these 2 years, and you do not have any capital appreciation, just for the sake of simplicity in this example. I've discussed these costs in extreme detail in my previous video. Make sure to check that out after this video to understand what are these costs and how are they calculated. Scenario 2 is when you use low-cost partner banks such as SBI, PNB, which offer better forex and bank remittance rates. The absolute amount will be lower as we are remitting through partner banks. But in this case also, DSP Equity Fund's cost is higher compared to INX GA by 1.3% approximately. So Gift City Global Funds are more expensive, but they're solving a different problem. They are for investors who want global exposure without the effort of managing it themselves. And these funds can try and generate alpha over the index. So what are the pros and cons of global mutual funds? Let's look at the pros first. First, these funds are not restricted by SEBI's overseas investment ceiling. AMCs can accept new inflows anytime without freezing subscriptions. Second, we've seen it's suitable for investors who don't want to pick stocks and prefer professional management for global diversification. Third benefit is there's no foreign broker needed. You can invest directly through the AMC's Gift City unit. Fourth, you get global exposure from India's financial ecosystem while staying with the Indian regulators' oversight. Lastly, simpler ITR filing as the fund pays tax, making your redemption exempt. But the cons are, first is a major one in my view. DSP Global Equity Fund is brand new. There's no past performance to evaluate and make an investment decision. Second con is that minimum investment is significantly higher at 4.5 lakh rupees. Lastly, of course, we saw that investing in the fund is relatively more expensive as you're paying for professional management. Once more AMCs such as Parag Parikh and ICICI Prudential start launching global mutual funds in Gift City, investors will have more options to invest in funds which align with their investment strategy. More funds could also mean lower costs, lower minimum investment, more investing strategies, and smoother digital onboarding. In my personal view, it's best to wait till there are more options available to be able to evaluate and make long-term investing decisions. Okay, we've now covered all 3 Gift City routes in this series. First, we saw NSE IX UDRs, which are for investors who want fractional ownership in top US companies directly from India. Second, we saw India INX Global Access, which is for investors who want broad exposure to global stock, ETFs and bonds across 135 plus markets. Lastly, Gift City Global Funds is for investors who prefer professionally managed long-term global portfolios. But each of these options come with their unique set of challenges. So make sure to understand the charges, pros and cons of each of these options before making any investment decision. You can check out my last 2 videos for a detailed understanding on Gift City. If this video helped you understand how Gift City Global Funds work, do hit like, share it with fellow investors, and do subscribe to the Wealth Palette by CA Vamika. Thank you for watching. See you in the next one.